So in this video, we'll be talking about multi-time frame analysis. If you're struggling with knowing where the market is trying to draw into, pay attention and listen closely. The first question is, what is multi-time frame analysis? It is when you pair up at least 2 or 3 time frames together to understand market direction and structure. The first thing you want to do is you want to start from a higher time frame. And in this depiction, I have what my 4-hour time frame. I'm working my 4-hour time frame. What you want to see on the 4-hour time frame is I want to look for a break of structure to the upside. In a bullish example, I want to look for a break of structure to the upside, indicating what bullish price action. Now, what I want to do is I want to wait for price to pull back. Then I want to buy what in discount array, meaning from a daily range high to a daily range low. I want to make sure I'm buying below the 50% of that expansion. Now that allows me to what enter at a what the very cheap price and sell out at a premium or expensive price, bringing the logic of buying and selling of your day-to-day activities. Now, how to know when market is actually trying to pull back. The first thing you see is a change of character on the 15 minutes time frame. Now on this example, pairing up the 4 hours, the 15 minutes, and the 5 minutes, I even down to the 1 minute. One thing you want to understand is first you want to look for a break of structure on the 4-hour time frame. Now I'm moving away the daily time frame, the daily bias point of it, but I'm working with what structures now. Our daily bias is a whole different thing entirely, but I want to teach you what's directional bias. All right. Now, for me to know that price is pulling back on the 4 hours, all right, I want to see the 15 minutes change direction, right, signaling a pullback. You change your character, this market structure shift on the 15 minutes time frame is telling me that, okay, I want to pull back into discount to a key level to react from. The next you want to move on to your intermediate time frame. Now, at this intermediate time frame, you can decide that you want to be taking short positions, meaning as price changes character, all right, I'm not looking for the trend to change to come to this swing low, right, but I'm trying to sell to a key level, which is maybe another block or whichever PDRE you use. It can be your supply or demand zone. All right. Now, what you want to see is instead of taking your aggressive entries at this other block or at this breaker block, to stick to a higher probability setup, you wait for a reaction on the lower time frame. What do I mean by that is when price reaches that your key level, when price reaches that your key level, instead of trying to rush the entry, you wait for a shift in market structure. Meaning this pullback that occurred, this pullback that occurred from this upside, all right, you want to see a shift. When price hits that key level, instead of trying to rush your entry and FOMO into unnecessary trade, you wait for a shift in market direction. Once this has occurred, all right, you can now you can remove the daily time frame. You have no concern with the higher time frame. Rather, you have no concern with the higher time frame. You're trying to stick to this new expansion leg. Now, this blue indicator. Let me move all this my unnecessary drawing. This blue line over here, all right, is representing our 15 minutes time frame. All right. Now, what you want to do, moving away from the 4-hour structure, you're focusing on now. You're focused on the 15-minute structure. Once price has broken above a previous high, which signals a change in trend. What do you want to do from a DNS for? You want to look for a key level in this expansion leg. Also, in this key level expansion leg, you measure out your discount and your premium level. You expect price to come back into your discount level, right, and pick your points of interest. This allows you to stay on the probable side of price action, right? It's okay to buy from premium when price has mitigated a key level, but to stick on a higher probability, it's better you wait for price to drop into a key level on a 15 minutes time frame. It can be your whichever PDR you use, your change state of delivery, your order block, or whichever. All right. Then you cannot take an entry. All right. You have a tighter stop loss, you have a better entry, all right, and you're not getting reckless stop loss. Your stop loss can come at that low, and then you can target buy side liquidity. Now, key to note: if you're trying to short this pullback, there's one thing you should not try to do. Don't try to force a trade. What I mean by that is, price can be trending lower. Price can decide, oh, it's trending lower. I might decide not to reach back into discount. If you are trying to short this area and you're trying to force the entry, you don't see a trade setup, you don't see a clean structure, you're trying to force the entry, you take so many losses. So what I advise new traders to do is they should stick to the side that's aligning with the 4-hour time frame. Now, what have we paired up together? We've paired up the 4 hours, the 15 minutes, and this red line, all right, can be your 5 minutes or at worst your 3 minutes entries. All right, you want to see a key level on the 15 minutes time frame that can order block. What you want to do again at that same order block is you want to wait for another shift of market structure, and this will require a lot of attention. There's no way you just walk away from the chart and things like that. You allow price to reach in for your key level. Sorry for the messy chart. You allow price to reach for your key level, and then shift structure again. Then when you shift structure again, or it gives a rejection candle. What do I mean by rejection candle? Meaning when price, hits that key level. Let's say you have an order block here that you're trying to buy from. Let's say price hits that key level, or that supply zone, whatever. Once it gives a rejection candle and closes above, you buy the retest. At this point in time, your stop loss is already incredibly tiny. right? Instead of trying to take out from this ozone, what if this your point of interest you marked is wrong? That's how you take unnecessary losses. But pairing up what your time frames together, that will help you stick to higher probabilities in terms of picking point of interest. Like I said, there are different kind of time frame alignments, but I'm explaining the 4 hours, the 15 minutes, and the 5 minutes. All right. Me personally, I don't go below the 5 minutes. What are you trying to do? You're trying to see on the 4 hour time frame, is there a break of structure? If the question answer is yes, yes, there's a break of structure. What do you want to do? You want to mark out the low of the break of structure to the high of the break of structure. Then what you want to do next? You want to measure out the premium and discount of this area. So let me use the line chart. Fine. What you want to do is you're trying to look for a break of structure to the upside. What you're trying to do next, you're trying to measure out what this expansion. Now, before you look to short to discount array, you must see a shift in market structure. Now, first of all, I'll show you the 4 hour, which is in red color. The 15-minute change in structure, meaning let's say there's a structure that broke over here. All right. And before you look to short, let me change the color to green. All right. The green is the 15 is representing the 15 minutes time frame now. All right. Before you look to short, you must see a change in structure. Now, anything that makes this thing hit your stop loss, I would advise you don't take another setup, because trading counter the trend can really, really be very toxic. So to stick to higher probability, what I do in particular, what I do when the market condition is not really, really sure, I will surprise to at least come to my discount array without taking any short position. Price hits my key level, I can spot on my 4 hours, and you might not see a key level on the 4 hours. You can use the 1 hour or the 15 minutes key level. Once price hit that key level, you want to see a shift in market structure on the 15 minutes time frame. Once you spotted that, you wait for price to graduate into this discount array, then you buy again at a very probable price. Why are you trying to wait for price to pull back? Trying to see that okay, price has been creating lower highs, lower lows. You want to anticipate that price should create a higher low, and then this area should create higher high. It's all about understanding market structure and a little bit of trend. Don't forget to implement liquidity. But over in this video, I'm really talking about multi-time frame analysis. I'll see you on the next one. Bush. So GBP currently is trending higher. So what we're trying to do is let's try to pick a 4 hour break of structure and work with that. All right, so let's work with this one. Let's work with the next couple of break of structures. All right, so I'll mark it from the high. All right. Now, the first thing you want to understand is where is the most recent break of structure on the 4 hour time frame. This is the most recent break of structure, and this is the low that we expect price not to invalidate if truly bullish. So what are you trying to do? Try to measure out the premium and discount of the dealing range. Why? Because you're trying to make sure you are what? You are buying below the 50% of what? Of the dealing range. Right? Now what you try to do is you try to look for your point of interest in the discount zone, meaning from this high up until this swing low. All you are trying to do presently now. So moving forward. And now like I said, ouch. Like I said, you can use the 15 minutes time frame to check if the trend has actually changed. Now, if you look at price have actually changed structure. It broke below this low first. Price tested it as a breaker block. Now, let's see if we can still get another short opportunity to sell price action. So, this is another point of interest. It's another block. Let's see if price has already reacted from this breaker block already. But let's see if price will actually give us another pullback. Now, the one thing you don't want to do on the counter trend, meaning you trade it against the actual trend, is you're not trying to aim this low, because some of us might be like, oh, the trend is likely going to change. The 4 hour is telling you are bullish. Why are you trying to switch your buyers? Second, you're trying to aim every stop point you can find, meaning every stop point you can find in the discount below the 50% line, that will be where you'll be targeting as your take profits. You're not looking for price to run all through the range, but okay. This can be our point of interest to actually go longs again. Why? Because from here we can see this pattern. You can see this structure pattern, and this low, that high, this low, then the higher high, then the first pullback after a break of structure. All right. Now we know why price is coming to that area. We have extra confidence. I'm not saying higher highs, higher lows, or nothing like that. Trying to say, okay, price is in discount. I want to see price in discount to take high probability longs. Now, so many people want to take aggressive entries from that area, but I personally want to use that as an area in price where I expect price to reverse from. Why don't I like taking aggressive entries? Is because price can just run through your stop loss. For people that trade JPY very often, price can decide that okay, you want to first take your stop loss. Your stop loss is what I need first. Meanwhile, price might still respect you, but price might decide to run through your area and still move in your direction. All right. Now, what next? I have that point of interest and until this. So let's see if I can see get short opportunity up until this stop hunt or my point of interest. So next, moving forward, price go back into that zone. price disrespected is go back into that premium area. I can decide to sell from this other block. I'm a very big fan of counter trend analysis. But let's see. Now, the main reason why if you take a loss on counter trend, you don't chase price is because if you decide to chase, like trying to short, by all means, that price should come back here. Price might decide that it's not going to come back to that area. Right? Price can decide, okay, it doesn't want to go back into a discount. So if you take a loss from the counter trade, it's better you wait until price flips bullish properly for you to know your buyers. But let's see. I just expect this had to get invalidated actually because it has shifted structure correctly. Can I look forward to? Can I look for price to continue dropping from that area? All right. So that's actually very good. Tear down. So let's see. You can still find another point of interest to sell from. Find another point of interest to sell from. It's not so clean presently on this time frame. That I can say for free. So price average. Okay. This is price has broken these structures over here. Then I can use this area to sell structures again. And now what can I do? I can decide to use that area as my point of interest to go short. I'm not trying to force any trade. So my stop loss come above this high. Then I take profit at maybe this liquidity zone or my point of interest. So personally, I just aim a 1 to 5 and get my piece and I'm out of this trade. 1 to 5. Let's see price will get back. So a decent level of inducement has been formed. Like I said, if you want to take a setup, make sure there's a lane buy order and sell order opposite each other. So price has taken out this liquidity already. Now, this setup becomes low probability. But price has not got to your point of interest that you can now still hold on to, and maybe price will still actually reach into that level. So moving on, price is rejecting that liquidity zone. In this low, this one. Then I go to price moving forward. Then what happened? Price whacked my entry at this point. All right, then I can now hope that area will hold. So that area actually held correctly. Now, our point of interest, like I said earlier, you see, price took out, okay, it did not take out this low, but it took out this low. So if you're trying to take aggressive entry, price will stop you out before even moving in your direction. Now that price has gotten to your point of interest, the first thing you do is you erase your charts. Then you focus on one side of price action. Okay, price has hit my key level. I'm expecting a reaction from this area. This is presently a change in state of delivery, this one. So let's go down 5 minutes time frame to see if you can get a very good entry. Okay. I can find this balanced price range, a BPR, that I expect price to react from. This balanced price range. Now, before I can take this particular entry, I want to see a break of structure above this high. A break of structure and the inducement and an inducement level will really help me in trusting the setup even more. So structure has broken level, has broken above the high, and then we already have a decent level of inducement. So to be on the buy side of liquidity, what can I do? Can decide to take a buy setup. Where is it? I decide to take longs. My stop loss comes below this low or below this swing low, but let's say below this low, then I cannot target buy side liquidity. Let's target anything you want. You can target this area, 1 to 7, or you can just target the whole dealing range if possible. Right? But personally, in and out before that. Now let's focus on your setup. Let's see if this setup will actually hold. Missed entry. Already have a very bad missed entry over here. But regardless, let's see. The price has not moved. So price has already triggered in your trade already at this level. I thought it was going to be a missed entry, but price still came back to revisit this inversion gap. Now let's see if this area is going to hold. We'll see. I just let that price actually reached up into buy side liquidity. So just like that, you're bagged. If you held up to the high, you've bagged a 1 to 10 rate to reward.